After propelling through the 1300 mark and rising 1% on Tuesday, gold is back down again, still above 1300, but it has retreated after hitting that 11-month high. So why is gold safe haven appeal so here today but gone tomorrow? Why can't it stick? Joining me in studio today is the best-selling author of Currency Wars, Jim Rickards. Jim, good to have you back in studio.
Good to be with you, Danielle.
So here today, gone tomorrow. That's how a lot of people would sum up this recent gold rally. We saw what the news out of North Korea did for gold. Why does it seem that some geopolitical tensions have more impact on the metal than others?
Well, there are two things going on. One is, you're right, the pop on Friday had to do with this, and earlier this week had to do with this missile, and then people are saying, well, okay, it's not World War III, no one's dropping any nuclear bombs, so it goes back down again. I don't quite understand that reaction. This is a very serious threat. We're heading for war with North Korea. I don't know what it's going to take to get not just gold to go up, but stocks and other markets to be affected by it. People seem to have very short attention spans. They go, if war's not breaking out today, it's all good. That's not how I think about it. I'm just looking down the road. You can see the war is coming. Kim Jong-un is not deviating from his path to get ICBMs and nuclear weapons. The U.S. will not allow it. There's no middle ground there. It would be great if we could have diplomacy. I think we should ratchet up sanctions on China, but I don't see any of that happening. So we're on this path to war. But having said that, yeah, gold goes up to 1320, back down to 1311. People go, why doesn't it stay up at that high? Look, there's a little bit of profit taking. Don't underestimate the extent to which gold is not just gold buyers. It's also hedge funds are in it, leverage players are in it. They don't really care if it's gold, soybeans, or coffee beans. I mean, to them, it's just another commodity. So if they have a nice profit, they'll take profits. They have tight stops. It goes down a little bit, they have to sell. But the bigger picture, the one I'm looking at is, gold hit an interim low on December 15th, about $11.28 an ounce, $1,128 an ounce. It's been grinding higher ever since. It's up over $200 an ounce. It's the best performing asset, one of the best performing assets of 2017. Now, yeah, it's been up and down, but there's this pattern of higher highs, goes up and down, up and down. But every time it goes up, it goes a little higher than the time before. That's a very positive pattern for gold.
But it always comes back to the U.S. dollar, though, right? Whenever there's a direct threat to the U.S. dollar, don't we really see that rally happen more so for gold?
Well, now you're into the currency war. It's a very good question, Danielle. When people say the price of gold, see, I think of gold by weight. I say, how many ounces, how many kilos, how many tons do you have? That's how I think about it. But yeah, most people talk about the dollar price of gold, but you're kind of privileging the dollar. You're saying the dollar is the way to count everything. Well, you can count gold in euros, you can count in Bitcoin, you can count in Japanese yen. So I think of gold as money. I think of the dollar as certainly money, the euro as money. These are all just cross rates. So when I see a higher dollar price for gold, I just think that the dollar's weaker. Likewise, if I see a lower dollar price for gold, I say, well, gold's constant, the dollar just got stronger. So what's really going on now is, well, three things are going on. One is the fear trade that you just mentioned. There's some technicals involved, supply is short. But the third thing is we're seeing a weaker dollar. That means a higher dollar price for gold. So if you want to know where the dollar price of gold is going, ask yourself, where's the dollar going? Dollar's going lower. It has to, because Yellen has tightened into weakness. We're getting disinflation, not inflation. And so she needs a weaker dollar to get some inflation.
I think, you mentioned it's important to practice patience, especially when you're following gold here. But from what I'm hearing from a lot of investors is they want to see that 1900 gold again. They're saying,
Sure.
Why is it different this time? Why can't we have that continuous rally here?
Well, I had a very good conversation with Jim Rogers. You know Jim very well,
yeah.
Probably the greatest commodities trader of all time. And he said to me, nothing goes to the moon or to some, but we both expect to see it at $5,000 or $10,000 an ounce. And I stick to that. Gold is going to $10,000 an ounce. Maybe not tomorrow, maybe not for a couple of years, but that's the fundamental price of gold as money. But what Jim said to me, he said, nothing goes to that level without a 50% retracement. So when he saw gold go to 1900, he thought that was a little bubbly. By the way, I started buying gold at 700. I have friends who started buying at 200, so good for them. I started buying at 700. I kind of dropped out around 1375. This is back in 2011. That spike from 1500 to 1900 happened very fast, and it looked bubbly at the time. But what he said is everything retraces 50% before it resumes its path upwards. So using 200 as a base, 1900 as a spike, 50% retracement would put around 1050, which it did hit in November 2015. So it looks like it's performed that retracement. Now it's on its way back up again. The question is, what are the catalysts to take it higher?
Could one of the catalysts be Bitcoin? Is it stealing gold's thunder?
I don't think so. I mean, Bitcoin's a very small market cap compared to gold. To me, it's a little sandbox. People can play in their Bitcoin sandbox if they want. I don't really think it has much impact on gold one way or the other. And Bitcoin looks like a bubble. By the way, I've been on Wall Street a long time. There's certain, tricks of the trade. I mean, basically, frauds of various kinds. So there's pain in the tape, wash trading, Ponzi's. Ramps, pump and dump. There are all kinds of schemes people do to kind of get things up and dump it on the suckers. I'm seeing all of them in Bitcoin, all of them at once. There's good forensic evidence that there are people doing wash sales. Like you and I could sell Bitcoin back and forth at 4,000, 4,100, 4,200, 4,300. There's no profit and loss because we're selling it back and forth to each other, but we can paint the tape upwards. The suckers don't know. They're getting sucked in.
So gold's still the ultimate safe haven for Jim Rickards?
Yes, it is.
Thank you so much for your thoughts today. President Trump threatens to totally destroy North Korea. Another hurricane lashes out. A second monster earthquake jolts Mexico, and the Fed is unwinding its massive balance sheet. Does this sound like the coming of the apocalypse to you, Jim Rogers?
No. Unless Mr. Trump does something foolish. I mean, the Chinese have told Mr. Trump that if he starts a war, they'll have to defend North Korea. But they told North Korea that if you start a war, we will not defend you. So there's nobody who's going to go to war. And the South Koreans have told Trump the same thing. They will not get involved in a war. So if there's going to be a war, it has to come from Mr. Trump. Otherwise, there's not going to be a war. I'm not worried about a war.
Yes, no, for sure. It's just this past week with everything happening, it has seemed to many people like it was the end of the world. And last time we spoke, Jim, we were talking how you feel the next bear market will be the worst in our lifetime. So, how can investors cushion the blow here? How can we prepare for it?
Well, first of all, Danielle, the one way you know that last week was not the end of the world is because markets are making all-time highs. Markets do not make all-time highs when the world is coming to an end, I assure you. Well, the way to protect yourself is to invest in what you know. I mean, don't invest in what I say, maybe, and listen to Daniela, but the only people who survive when things go wrong are the people who are investing in what they know. They know what they invested in and why, and they know what to do.
Well, you mentioned that, yes, indeed, markets are making all-time highs. So obviously investors are not concerned here, and they're not turning to gold.
I'm not either. I own gold, but I'm not turning to gold either.
Another interesting point you made is when this crash comes, you don't necessarily want a millennial around you. What did you mean by that, Jim?
Well, Danielle, I know you are a millennial, but I wouldn't mind having you around. But otherwise, most millennials, I've been around a long time. I know that when things go bad, 26-year-olds just don't have any experience. I didn't have any experience when I was 26. At one point when I was 26, I thought I was the smartest guy in the whole world, and I was. 5 months later, I lost everything because I didn't know what was going on. I didn't know enough about the world or myself. So I've seen all this before. Young guys, young women make fortunes in times like this, but when things start going bad, they don't know what to do. I didn't, and most others didn't either.
Talking about something millennials love, Bitcoin, Jim, I have never seen so many people loving to hate something so much. Some guests come on telling me they're looking for $10,000, $50,000 Bitcoin, while others tell me it's the biggest bubble. Where does Jim Rogers stand?
Well, I'm not sure you should ask me, Daniela, because I never bought one. If I were smart, I would have bought them, 9 years ago, 7 years ago, 5 years ago, 5 months ago. So I don't know. If I just showed you charts of what's going on and described without telling you which country, which time period it's other, you would say, oh, that looks like a bubble, sounds like a bubble. It does. But don't ask me because I missed the whole thing.
Getting back to gold, Jim, I think a lot of investors are so frustrated that it's not moving higher here. They were rejoicing when it finally, pushed through 1,300 earlier this month to only come back down. What do you say to these investors? Just keep waiting, keep hoping?
Well, that's what I'm doing, Daniela. As you know, I bought gold a long time ago, many times, and I own a lot of gold, but I have not bought any serious gold since 2010, I guess, but I haven't sold any. And if and when gold goes down a lot, I plan to buy a whole lot more.
Do you think it could also be that people just expect too much from gold?
Daniela, yes, watch Kitco and you'll see. I'm telling you, when all the people on Kitco say to you, I'm never going to buy gold again as long as I live, and they throw it out the window, and when they dump their gold, that's when to be the time to buy. Everybody's still bullish. There's still a lot of mystics. Daniela, you know, everybody still loves gold, including me, but I'm not buying, not for yet.
All right, Jim Rogers. Thank you so much for joining us. We'll speak to you soon.
My pleasure. My pleasure, Daniela, anytime. Bye-bye.
And thank you for watching. We'll see you tomorrow. An outspoken trends analyst and expert, Gerald Celente, says investors can no longer ignore the biggest trend out there, Bitcoin. But is it headed to 10,000, 50,000 as some are suggesting, or is it the biggest bubble ever? Gerald, good to see you again. Thanks so much for joining us.
Thank you.
So obviously we're becoming more and more of a digital society here, as you point out. So does that mean it's inevitable our currency is also heading that way? Is Bitcoin the currency of the future?
It's all the cryptocurrencies, Bitcoin or whatever else, all the other ones coming on. You see what's going on, Danielle, is that people have lost faith in the fiat currencies. You had Jamie Dimon, of course, you know, from JP Morgan Chase, calling Bitcoin one of the biggest frauds. Well, you know, how about those 6 banks that were major banks that were convicted of fraud? So I guess frauds know of fraud, but it's not that at all. What it is that they're afraid that Bitcoin is going to take away their business, and they're trying to kill it.
Right.
There's no two ways about it. And what's very important to look at is what's going on in China. China has just put on restrictions, so by the end of this month, it's going to be very difficult for people to deal with Bitcoin. Why? Because the yuan has been growing very rapidly. And when the yuan was declining over a year ago very rapidly, it was the Chinese that drove up the price of Bitcoin because the yuan was being devalued. Here's the point that I'm making. You look at Chinese exports, they're way down. There's fear. S&P just downgraded their credit rating last week. You're going to see a devaluation of the yuan so they could increase exports. And now the people won't have Bitcoin to go into. So on a whole nother level, where are they going to go? They may go into gold. And on the broader level, it's the same thing in every nation. They're all going, so many are going cashless, as India did.
Right.
And so what people have lost there's no in God we trust to hold up anymore. There's nothing to attach yourself to. And people realize the fiat money scam. So we see Bitcoin having a long future.
All right. So,
and other cryptocurrencies.
So, Gerald, I'm assuming you did well with Bitcoin, that you got in at a good level.
I never bought it.
Really, from the way you speak, I would think that you've had such success with Bitcoin.
No, I don't own any of it.
All right. Well,
again, I'm a trend forecaster. I don't give financial advice. There's the downside to it, too. You know, I have investment money. I invest in different things. I rather invest in a tangible. So I invest in gold.
Right. And on that topic, Gerald, you know, many would argue that Bitcoin has stolen a lot of thunder from gold. And that's why we're not seeing gold rallying more here.
It's very true. Again, you know, people are sophisticated. It's very easy to buy Bitcoin. And again, it's a digital world. I mean, you go to China, I mean, it's your smartphone app, man, and you're paying for everything. Right. So that's very simple like that. But as I mentioned, Now with governments, and that's the biggest the biggest downside of cryptocurrencies, governments could change it like that, just like they did in China. So where are people going to put their money as their currency is being devalued? And it goes back to the gold standard. And that's why we believe that while Bitcoin and cryptocurrencies are going to have a place in the future, as we see it, still the bottom line is gold is the tangible that nothing replaces at this time.
And what do you think in terms of forecasts for Bitcoin? You know, I've never seen anything polarize investors so much so, you know, some either love it or either love to hate it. Some are calling for $40,000 Bitcoin, while others are expecting it to fizzle away, saying it's the biggest bubble ever. So where does Gerald stand on the spectrum?
We don't believe it's going to go away. We don't know the price, but the price shot up too quickly as we see it. You know, again, people forget, it really grew when the yuan was declining. And now it's only about 15% of Chinese. And it's very important, too. The banksters are going to continue to talk it down because it makes banking obsolete. Mm-hmm. And the banksters obsolete. So they're going to do everything they can to stop it. And again, you listen to the words of Jamie Dimon, and he brags that it's central banks that give fiat currencies, that give fiat currencies their standard. Central banks, a bunch of private banks. You know, what currency is that? So there's going to continue to be a fight between the banksters. And by the way, what Bitcoin also represents is the populist movements that are springing up throughout the world. People don't want to be attached to crooked governments and central banks.
All right, Gerald, let's wrap with your forecast for gold now. I know you're obviously a big advocate of the yellow metal. Where's it headed for you right now?
Well, again, it's our same forecast, Daniela, we've been saying now for about 2 years. Gold has to break strongly above 1,400 for it to gain more strength. And when it does, and I'm talking 1460, 1480, 1450, 1470, we see it skyrocketing to 2,000. But it has to break above that point. And again, of course, there's concern about rising interest rates, but interest rates really aren't rising that much. When you put in for inflation over the last 10 years and how few times they raised interest rates, they're still near zero when you really put it into it. So it's not going to have that much an effect on it. And again, it also weighs on the dollar. And the dollar, again, is losing strength. What is it, down about 7% this year? Oh, and by the way, the yuan's up over 6%. So just to show you what's going on. So we don't see strength in the dollar, and so we see a positive future for gold.
So last question, you say positive future for gold. Were your hopes dashed, though? Because, you know, we saw gold finally make it through the 1,300 mark to only come back down last week. So what's the hope they're looking for 1,400 now?
Well, again, you know, it's going to take time. And by the way, also important, we don't believe when there's a geopolitical crisis and people jump into it that that's sustainable. And unless, of course, it's a world war, you know, and then, you know, you could kiss your gold goodbye anyway. But so again, short term, we're in the range that we are now.
All right.
And when panic breaks out again because of the bubbles that are going to burst, whether it's in China with their debt to GDP ratio at 300, or the central banks trying to figure out how to unwind this $16 trillion worth of debt just in 6 central banks that they have to unwind, you're going to start seeing a lot of problems arise. So when those kind of problems start really sparking up again, that's when we see gold moving up. Right now, we see it in the range that it is.
All right, Gerald, I always appreciate the enthusiasm. Thank you so much for joining us.
Thank you, Daniela.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow. Thanks for watching.